Hello everyone, welcome to the first lesson on my futures course. This lesson is going to be on YouTube for completely free, and the reason I'm doing this is because I just want people to know exactly what futures are and why I like to trade them. What I'm going to be doing today is I'm going to be explaining what's actually necessary to know about them, and there's going to be a lot more in my community in the description. Going on to this first slide, I'm going to explain exactly how they work. So, usually whenever you're buying like a stock from the stock market, you usually need a lot of capital. And the reason I say that is because if you're actually wanting to make a good amount of money, you need to have a lot of money in the stock. And then you hope for like a 1 to 5% gain. And that is basically how you invest, how you make your money. Now, doing that, people usually do that for the long term. But for trading futures, it's usually most likely like a short-term thing, like just a couple minutes long, or maybe like 30 minutes long, something like that. And that's why we do it during the day as day trading. When you're buying a stock for futures, it's not really a stock, but instead a contract. And there's two types of contract. One is a micro and another one is an E-mini, which is 10 times the value of a micro. For these contracts with futures trading, you can either make money when the stock goes up or even when it goes down. Now, when you want the stock to go up, that's called longing, and I made it in green so you can kind of like be able to tell, like you can like color code, think about this the way. So when you want to long the stock, you're betting for the price to go up, and when you want to short the stock, you're betting for the price to go down. And if you're wondering exactly how you make money when the stock market goes down, you're basically buying negative stocks so that when the price goes down, it actually does the opposite and makes you money. Going on to this next slide, what are points and ticks? So instead of like dollar values, right, these stocks are actually priced by what's called points. And for example, which is what I trade, for the S&P 500 and NASDAQ 100, which is S&P and NQ, there are 4 ticks inside of each point. Now, the easiest way to explain this is that a contract price is equal to a tick value. So, an easier way to say this, when you're buying an E-mini NQ contract, it will cost you $5. And that means that each tick value is $5. Okay? So, if you have a contract, for each tick the stock changes, you can gain or lose the tick value. And I'll also give more examples on this in the next couple slides. So basically, however much you spend on contracts, that amount that you spent will be how much money you will gain or lose on each tick. Now going on to the next slide. How does someone make money? So let's create an example to understand this. You buy one E-mini contract for NQ, which is $5. Okay, so you paid $5. So for every single tick that the price changes, you will gain or lose $5 per tick. Now, let's say the stock goes up by 10 points. Well, there's 4 ticks in a point. So if you do the math, 10 times 4 equals 40 ticks. Now, each tick you'll go and gain or lose $5. So let's just say it went up 40 ticks and it's $5 per tick, you would gain $200. And that means for a 10-point move, you made $200 from $5. Now let's say you want to scale it up a bit and you buy 5 E-mini contracts and you have a 50-point move in your favor. So doing the math here, we have 50 points times 4 is 200 ticks. And then for each tick, you gain $5. So 200 ticks times 5 equals $1,000 made. But since you bought 5 contracts, that would times that by the 1,000. So you'd have $5,000 made from $25. That is how powerful this can be. And in addition to how powerful that is, a 50-point move can just take minutes. This means that you can potentially make $5,000 from $25 in just a few minutes. That is just insane. Going on to this next slide, how much capital is needed? So the question a lot of people wonder when they're starting futures is, how much money do I need to get started? Well, in theory, you really don't need much. So when you're trading, you should have the amount of money that you're willing to lose. This is because your balance can really quickly go to $0. Think about it. If you're in a trade you can lose a bunch of money really quick, just as you can gain a bunch of money really quick. So it's usually recommended to have a few hundred to a few $1,000s at least, but a lot of people don't really feel comfortable doing that. So what do you do if you don't have money? And this is where you trade with a prop firm's capital, which is what I do. I'll explain prop firms later in the course, but in summary, prop firms, they basically, it's like a company that lets you trade with their money, and in return you usually get like 90% of what you make. So for example, a prop firm gives you $50,000 to trade with, you make $10,000, and then you get to keep $9,000 of it. So it's pretty awesome, and that's what I do. All right, now let's go on to this last slide. So I basically gave you a summary of what futures are in the most simplest way possible, and you can rewatch this if you were confused. They're indeed, in my opinion, the most simplest, but also high risk to high reward kind of trading. I have a lot of extra free education about everything you want to know about futures in my Discord community, which is at the bottom of the screen or in the link in the descriptions. And if you have any questions, just leave them in the comments or DM me on Discord. Alright, that is all I have for you guys about futures. I try to make it as simple and least overwhelming as possible. Again, there's extra education in my community that I watched whenever I first got started, and I learned a lot from it. But apart from that, that's all I have, so you all have a great day.